welcome back to another edition of Diamond's Edge. Greg Diamond here. And this week, you're going to look at three things. Well, two things. We're going to look at world stocks with the Vanguard total stock market of the globe. Look at a weekly chart, daily chart. And then we're going to look at some time factors. And then I'm also going to factor in how interest rates could shape out, or could play out with the Federal Reserve making their moves last week, holding, but maybe a little bit dovish. Inflation numbers coming down. So I'm going to kind of combine all three of these things and factor in, where markets can go next. All right. So let's start here. And again, this is the Vanguard Total World Stock ETF, ticker VT. All right. And what I highlighted to 10 stock trader subscribers this morning is this red dash line was all-time high back in 2021. Obviously, we saw the inflation bear market, if you will, take this down. And then, as of March, April of earlier this year, it regained those old highs. We dipped down into April, and then now we're back trending higher. Okay, so now on this chart below, you can see here the RSI is a little bit showing negative divergence, as is a composite index. So does that mean that we should just go and sell everything and that, we're going to usher in this new bear market? I don't believe that's the case. Doesn't mean that we can't see volatility, and I'll explain that in a little bit. But essentially, this trend is very, very strong. Obviously, we can see semiconductors still rallying, NASDAQ still rallying, S&P still rallying. We did see, and again, this is the world market, but we did see some volatility in Europe. But that is actually leading into oversold levels. Okay. And I'll probably have more on that next week, and I'll explain why later this week, early next week is going to be important from a time perspective. All right. But so, again, this weekly chart, what I get, and I mentioned this over the last week or two on Twitter and 10 stock trader subscribers, is the fact that, this isn't an area of the market where I would start to get, aggressively bullish buying call options, but it's not something I was short either. What does that likely mean? Well, if I'm correct, it likely means that we see, a working off of overbought levels. And then if we do see some weakness over the next week or two, that probably presents another opportunity to buy. Sounds simple, but that's what you do in strong bull markets like this. All right. So this is the weekly chart. I want to show you the daily chart and just a couple of things to highlight here. All right. So I'm going to zoom in for you here. Okay. Now what I have labeled is a few things. Number one, these vertical lines. Okay. This is June 20th to June 25th. This is an important Gann time factor. It's a natural time factor, if you will, meaning you see these dates tend to make some type of trend change. Could be major, could be minor, but again, with a strong uptrend that we are in, I would look for this for two situations. Number one, this red line is where we actually get a top into later this week, next week, and then we correct. The worst case would be a top and then a correction into the next set of Gann time factors that I have, which is around February 12th to around the 19th. Okay. So again, this red line would mean, we get a rally into later this week, early next, and that actually creates a short-term top, and then we see this correction over the next, 2 or 3 weeks thereafter. And that would set up the opportunity to buy. The other one, which would be a situation to buy very, very soon, is outlined here in black. Maybe we make a lower high and then we correct, and it could be a little bit steeper. It could look something like this. Okay. Maybe something else comes out in Europe. Who knows? Maybe the Fed has, it doesn't matter why. Okay. But if we see this dip, a little eruption of volatility, if you will, and that happens into later this week, early next, that's a situation where I personally would start buying, for another rally. So as you can see, whether it's short-term, long-term, we have this situation taking time into consideration of what I'll be looking for and how to trade it going forward. All right. And similar to, the weekly, you can see here on this daily chart that yes, the RSI and CI are starting to be a little bit or starting to diverge. So again, this isn't a situation where I'm like, we have to get aggressively long calls here, but it's also not a situation where it's like, hey, look, this is a strong uptrend. You probably don't want to short. Yeah, you could make, if you're a day trader, you could probably trade from the short side from a little bit, but I'm not a day trader right now. All right. So those are the two things that I'm looking at in terms of the world stock market. All right. And then taking time into consideration. Now let's factor in interest rates, okay? The Federal Reserve said they might cut next year, or maybe once this year. The biggest thing is that inflation, at least from market expectations and where it was historically, yes, it's still high, but it has come down. It's coming in below what those expectations are. Now, the job situation, even the Federal Reserve admitted this, is not as strong as it appears to be. A lot of part-time jobs, a lot of people losing full-time jobs, so it's not as good. All right, so where does that come into play in terms of when do they cut, if they cut? Again, you're gonna have to worry about that in the months ahead. But again, I always like to focus on what the price action is telling me, rather than speculate on what I think the Federal Reserve might do. So if we factor in the two scenarios where the outlook for the world stock market, VT, let's take a look at how interest rates could play out. Okay, now let's say as of last week we saw a low put in interest rates. Okay, and we get something like this again into June 20th, June 25th, and then we have a situation like that. All right, it makes another lower high, right, starting a downtrend from here. Okay, think about what would happen if interest rates bounce into this. Then likely means the stocks are going to fall. If it makes a high low, a lower high, we have another drop in interest rates. Well, guess what? That sets up the low in stocks to actually buy. All right, now the opposite would be, again, if we, maybe we factor into this July 12th is something a little bit more volatile. And again, this is fine. I'm just going over the situations, taking time into consideration, and then how interest rates will impact stocks, because we know they will. All right, maybe it's something like this. All right, and then we get the big drop. All right, let me get a different color here so you can see it a little better. So this is a situation that I also, would be volatile, no doubt. It would make a slight new high here, but maybe not a new high right here where, interest rates topped out back in late May, right? So that could be a situation where, yes, we see extreme volatility because interest rates are all over the place, are actually rising, but ultimately this tops out as well, and that gives us a low in stocks to buy. So a couple of big picture items, again, with the world stock market, and then two different sets of GAN time factors that I'm watching, both this week, early next, and then somewhere into July. Well, not somewhere, July 12th to July 19th specifically. And then how these factor into, how interest rates are going to play out, which is going to be reflected in the stock market. All right, so those are what I'm looking at least this week and next. And I will see you next week. Thank you very much.